All right, everyone, great to be back with you. We have as our guest once again, Bob Kudla of Trade Genius Academy here with us. If you're not familiar with Bob, you really ought to be. He is the founder and president of Trade Genius Academy, started back in 2015 after 25 years as an executive for two Fortune 500 companies in the financial services industry. And over the past 5 years, Bob has amassed a 65% overall win record in the market. And so in our past conversations, he's helped us make some financial sense, particularly the coronavirus. Today, of course, we're going to be talking about what we might call a post-riot economy, as well as the prospects for economic recovery post-COVID. So Bob, welcome back. It's great to have you here with us.
Thanks, Dr. Steve. Thanks for having me.
Oh, it's my pleasure. So why don't we start with obviously the most dramatic developments of late since we last spoke, and that's the fallout from the nationwide riots. I was telling you earlier before we started, the video that we uploaded earlier today on my channel was entitled "Business Owners Revolt by Leaving Riot-Infested Cities." And I cited a number of articles talking about companies like Seven Sigma Incorporated, which is was a Minneapolis manufacturing company. They've just announced that they are out of there. They are leaving Minneapolis because they were so upset about how officials failed to protect their companies. So with that, can we expect this to be a bit of a trend? Are we going to see an exodus of businesses from these cities in the future?
Yeah, so what happened here with the COVID pandemic scheme, and then this rioting, this basically controlled chaos that was imposed upon the unfortunate death of George Floyd, is that it accelerated trends that were already in motion. So what we've been seeing in the economy is the trend towards basically my home is my castle kind of a philosophy, where you can do more things at home, you can work at home, you can shop at home, you can eat your food that's not cooked at home. Basically everything that you used to have to go out for now can come to you.
Right.
And so where you are is not as important as if when you are what you do and how you do it. So being in a center city used to be an advantage. You're close to other like-minded people. You have culture that you can take advantage of. Your work is located there. There's a vibrancy there. And what these cities have done is that they basically have taxed and regulated these businesses to a point where they're really approaching making decisions to leave. Right. Now, the virus, when they locked the cities down, people work from home, and companies figured out they know how to do that now for the most part. And then when the rioting came, now people are like saying, "There's no way I'm going to go back to a city." And I think if it was just the protests and some scattered rioting, I think things would have died down. They would do the right thing, because there obviously is police reform issues out there. I don't think it's much of it's a racist thing if you're black. I think, you see it every day. But I mean, from a white person, as we've become increasingly militant in the way in which government interacts with its people, and I think that those things would have worked themselves out. But when we've now got this situation with the government now taking advantage of, look, they're all going broke, Dr. Steve. So they're like, hey, this will give me political cover to take money away from the police department, which really don't support me as a left-leaning politician, and I can shove it into people that I know then will vote for me and build up my political base. I think what they failed to realize, or they will realize in a very short order, is that people don't like to be undefended. These are the same people who will make it illegal for you to own a protective firearm, and then they're going to get rid of the police who will protect you. Right. So who you left with? The predators that are out there.
Right.
And so it's just going to accelerate the exodus from the cities, and the cities are doomed. They're literally doomed. It's basically dead man walking. I think a lot of them are realizing, OMG, what did we do here?
Did you see the Chicago mayor and how she was groveling to Walmart? Please don't leave Chicago.
Yeah, and Walmart's saying, well, we'll take a peek,
Yeah.
and I mean, they're smart. They'll say all the right things, but they'll never come back.
Right.
And that's just they're all going to hollow out, even though, cities may stay there. They may throw money at BLM, saying, hey, look, we're doing all the right things. They're basically being the Pharisees, right? They're praying in front of everybody about how, look at the virtue which I'm doing, and they're actually doing nothing, and they're going to bail out because they're not going to be able to recruit people. Who in their right mind is going to want to drive to work one day and somebody's sitting on the highway, and people don't take that kind of risk. So that's accelerating. So what you're going to see is you're going to see an acceleration away from inbound shopping. You're going to see acceleration away from in-city, and you're going to see a lot more exurb kind of activities. So that's why when I sent you the note this morning, I'm like, sell real estate in the cities, buy real estate in the exurb, not even suburbs. I'm talking exurbs. Go out 10 miles, go out 12 miles, be the suburb that's outside of the main suburb next to the city. Because look, Santa Monica was not spared.
Right.
Okay.
Right.
And so, you're going to have to get far enough away that the roving bands of folks aren't going to be able to take from you. And it's just going to get worse the more these cities crumble. So that's what I see happening, and it's going to have an impact. I think what we're seeing, and we might have talked about this before, and correct me if I do, because it's something I think is going to be a trend that's going to go for a long time. Look, the Starbucks lifestyle, right? I call it the Modella lifestyle, where you're a hipster, you may not have much, you live in a loft, you have a college degree, and the best job you have is a barista or a bartender, right?
Mm-hmm.
That's gone.
Mm-hmm.
Okay, you're going to have to find something more meaningful to do, and I think that trend is going to be the one that's really going to upset the apple cart, because people aren't going to know what to do with these educational certificates they got that they can't put to use, and now they're all being in the cities, kind of being cool. Now they got to go back home where mom and dad is and try to find a different job. So I think that's all coming. Now the golden line on this is, or the silver lining is, that I think a lot of manufacturing is going to come back on shore.
Right.
But they're not coming into the cities.
That's for sure.
They're going to drop into cities where they can get cheaper rent, cheaper, labor, whatever it is, and then people are going to go there because it's going to match up, in terms of their lifestyle. And so that's what I think is going to happen. And look, July, August, September, I think we're going to get the dip because the PPP money is going to run out. They're going to probably lay people off that they had to pay for. And the federal weekly federal check is ending in July. I think there's one more check coming or something like that, and it's done. And these people are going to have no jobs, and companies are finding they can do a lot more with a lot less. And I'll give you an example. Even where my daughter works, is that the company found out she coach at an ice rink, and they found out they don't even have to open to the public anymore. They can just rent the ice out and make more profit with less people than if they were a full service ice rink. And I think a lot of companies are doing this math right now, saying, hey, I can make more money with less people or less headache. And I think you're going to see a lot of re-engineering. So I think that's going to be coming at us pretty hard. And I don't know how the politicians are going to deal with it, because they're going to be fighting through the election while all this is taking place.
You mentioned escalation here. I came across a Bloomberg article written last year where they were estimating that on average 300 people per day were relocating out of New York City. So this was a trend that was already going on, at least up north and northeast. Or what did you call it now, Bob? Did you call it the vitamin D line or something like that?
Yeah, the vitamin D line, yeah.
Yeah, so north of the vitamin D line, these are our new COVID terms, right? So north of the vitamin D line, where all the Nordic tribes have to live, we're finding an exodus out of those cities, just incredibly expensive and the like. I don't know what's been going on in I'd say San Francisco or so. I'm trying to think of where's the vitamin D line in California, but certainly in the Northeast, we've been seeing almost just a mass exodus out of there. People going into, North Carolina, Texas, Florida, and things like that. So really, in the end, this is not even a trend. This is this is what do you even want to call it? A snowball effect. It seems to me it's going on. People are going to be leaving cities in mass, and hence exurb real estate is going to be prime.
Yeah, look, it's kind of, in California is a tale of two regions. Like Northern California, the Bay Area, people are bailing out of the Bay Area. Rents are falling, I think 20% year over year.
Wow.
And real estate's starting to fall. And now a lot of people working from home in Silicon Valley saying, hey, I want to work in Utah or Colorado or Texas. Right. I don't want to be here anymore. I don't want to live in a cottage. I make $200,000 a year and I can't even afford just to rent, so all that's happening. And like down here where I live, we're a recipient of that. So we're bedroom communities between San Diego and LA, and homes can't even stay on the market for a couple of days here because people out of LA and the Bay Area are snatching up their escape hatches. And you have to understand too, what else is happening, Dr. Steve, is that you have people that call themselves New Yorkers, but they're not there and they're not spending money in New York. So you have a lot of wealthy people, in the Upper East Side and Upper West Side. They bailed out as soon as the COVID lockdown started, and they went to Florida. They came out here to California. They went out onto Long Island, and that's where they're spending their money. So the cities make money off of sales tax receipts and property tax. And in the case of New York City, they tax people who work there. Right. They have a local tax. And right. So if these people start working from home, they're like, I'm not paying the New York City local tax. It's because the company's there. I don't live there. Right. And so you're going to see that's going to have a double effect on people. So you get this out migration, and also you got the spending that's going away too. So it's going to be an interesting, I would say, 5 to 10 years. Mm-hmm. Now, I'm going to say something I think is going to happen. I hate it, but they're going to do it. And it's probably, even though it's the most morally repugnant thing they could do, is they're going to bail out these cities. Mm-hmm. Okay, because if these cities go bankrupt, it's a domino effect. They basically have a gun to the head of the states and the federal government. Maybe they'll force reform, but I think that's why the Federal Reserve has been spending so much money, propping up everything. They got to get these baby boomers into heaven, right? Mm-hmm. And they got to get them off the demographic loop here, so they can deal with the backside of this bulge, if you will. And that bulge doesn't end till like another 12 years from now. Like I'm 60, and I'm 4 years on the other side of the 6 years on the other side of the median. So if let's say I live to what statistically should, it's 81, right? So 75. So 15 years from now, we should start seeing the demographics start to roll off. I think the Federal Reserve and the government are just going to keep buying assets to get that through, and the big holes are in these cities. Right. And so I think you're going to see something happen there. I don't like it, but I think it's going to be forced upon all of us to do that. It's a shame because we could continuously reward failure, and they know it. And that's why they do it. It's becoming the old adage with the bank. If you owe the bank $1,000, the bank owns you. If you owe the bank $1 million, you own the bank. Right. And that's the situation we're having here. So that's why I don't think we'll see a market crash. We may see some good corrections, but they're just going to simply just shove money in the system to keep the pension funds alive. Yeah,
the liabilities, right? But so that leads to the whole issue of the Fed. They just the job report came out on Friday. 2.5 million new jobs. That was pretty good. 15% to 13% unemployment going down. Actually, rather astonishingly good news. You seem a bit tempered on that, though. You think we're gonna dip in the next quarter or throughout this quarter?
That was PPP employees. Mm-hmm. So they've basically been held as employed, or they're counted on being employed because the PPP requires you to employ the people to get the forgiveness.
The forgiveness, so you don't have to pay it back, right?
Yeah, so I think we're going to be fighting over the next 3 months of people coming back to work versus people being dumped after the PPP money has been requirements have been satisfied.
Right.
So it's going to be a grind. Now the good news is, it seems like people are trying to get back to normal fast.
Yeah.
I just don't know what it's going to look like. There's going to be a when the way you described it, the post-COVID world. The
Right.
riots aren't so much. It's kind of Mox Nixed. I think it's really the COVID thing that's really going to be the tell on this. I think we're going to have to wait till August and September to see kind of how it is all really going to play out. Then we'll have a sense. But the good news is that people are retiring.
Mm-hmm.
And so there's going to be a labor shortage again. So I think, if anything, it's going to be a year issue.
Mm-hmm.
And then we're going to be back to really tight labor markets again.
USA Today says the Fed is signaling that interest rates will likely stay near zero, at least to 2022. So obviously they seem to want your money in the market. Market seems to like it. 27,000 Dow. I think first time since March. What's your take on that?
Yeah, and that's what Jerome Powell said during his press announcement for the Fed meeting today. He said at least through 2022. What he's trying to do here, he's trying to anchor the low end of the market, hopefully to drive, interest rates down on the long end of the market, so that eventually then mortgages will become more affordable. But what he's also signaling too is, hey, if you want to get a mortgage and do a 1 year or a 3 year ARM, then you can save some substantial amount of money.
Right.
And so,
right.
Yeah, they can't raise rates, Dr. Steve. They just can't do it. So that's part of that notion I was telling you about. They're just going to hold court for the next 10, 12 years. The only thing that's going to stop them, my only caveat, if they lose control of food prices,
oh, okay,
it'll become an issue because you can't print food. Now, the good news for the United States is that we don't really, importing food to us is a political decision, not a necessity. And what we do import the most is seafood. But we do own maritime assets like Samoa and some islands out in the Central Pacific where we're actually dollar denominated, and there's some other dollar denominated countries. So that's the only thing that worries the rest of the world. If the U.S. starts to slip on their currency, there's a lot of people linked to our currency that could cause them great issue. The Arab Spring happened because we did this in 2011. Okay,
when the currency got too
weak.
It inflated. It got too weak or too strong.
Too weak, and people that they tie their dollar to ours.
Right.
Currency was weakening too, but they have to import food.
Oh, I see.
Countries that have to import a lot of food are in trouble, and a lot of them try to match us because they run what's called a mercantilistic economy where they're forcing exports out, and so if they can't match us because they can't afford the import costs, like countries like India and Egypt and Morocco, those countries are in deep weeds if the U.S. dollar starts to really slip because it gets too expensive for them to import food. That's where the Arab Spring came from. That's also where we had the last gold and silver bubble. So that's why we're focused on, look, they're going to keep printing. That's the area that we're going to see it first. We're going to see it in the precious metals and the miners. And then we just got to watch food prices. So, we have those all on our filters and our screens. And so we're just keeping an eye on it because that will force the Fed to stop. And then that could force us all into some pretty nasty kind of recessions.
Let's transition because I think that's a good place to transition. I found one of your a shout out of one of your members for Trade Genius, who said that he was able to make $4,500 in half an hour. What's the backstory behind that? That sounds wonderful.
Yeah, so we have 4 different trading rooms, and one of the trading rooms we call the VIP room, and it's really designed for people that like to trade in the futures markets or like to trade options or little things that are a little bit more sophisticated than just buying and selling shares. And so that room, we allow people to actually interact with us like you and I are talking. So we have a number of people in there. Our two of our most experienced traders are in there, myself and another person. And the other people in the room, there's a lot of really heavy hitters in there. So we're talking trades, and that gentleman happened to follow one of our trades, and he went in a bit heavier in terms of his size. And he said he had to finally stop. He said his hands were shaking so much that he couldn't believe how fast he made the money, and he bailed out. So I just said, hey, it'd be something wonderful to share if you don't mind, because I could tell you he made that money, but it's nice for him to say he made that money. Yeah, so he did that, but he's not the only one. We have people regularly making a lot of money in the rooms. That's not normal. Okay, those are people trading with bigger size, and but what we do is we really help people make money nearly every day in the market, and we teach people how to trade. You know, we give them the trading tools. The ribbon system is outstanding, and then we give trades every day. I mean, look, today we just closed 12% profit on GBTC, which is the derivative in the stock market for Bitcoin. And we had a couple of nice trades in the miners yesterday, and we're trading the oil tanker stocks because of they're producing a lot of cash. So we have a lot of things for regular people to trade, and even if you have small accounts, we'll teach you how to grow it into bigger accounts and do it the right way. And so so we just help people that literally know nothing about the stock market, and we can get them up to speed in 30 or 45 days. And we're not talking any of this Robinhood crap. You know, we're talking real systems, real trading, not just day trading stuff. Those Robinhood people will be gone in 60 days. You know, they'll all get blown up. But we're going to teach people tools that they can use the rest of their lives, and solid tools that I've been using for 30 years of trading.
You mentioned the cryptocurrency. Am I right? Do you have a room designated solely for cryptocurrency? Am I correct on that? Or?
We do. We have a room for cryptocurrencies. That VIP room I just alluded to, trading futures and options. We have a stock trading room. And then we also have a room that trades what's called binary options. It's kind of like, if you familiar with sports betting, it's like over-under betting kind of a thing, where you're making decisions that the stock will do this or oil will do that over a certain period of time. Then you can make yes/no bets on that. And so it's an interesting thing to trade. More people don't really know about it, but when they get into our room, they find out, oh, that's a really interesting way for a small person to grow their account. And we have a lot of tools and what we call we have data history to help people, pick the right trades at the right time.
Wow.
So so you can really grow an account if you do it the right way. And so those are the rooms that we do, and I'm in rooms all the time. I mean, I've been, right now I'm on my 12th hour, right? I've been up since I've been up trading since 3 a.m. my time.
Oh,
and I'm in the rooms all day, and so you get access to us, and we think we do a really good job.
Bob, a lot of our listeners are obviously interested in gold and precious metals. Where does gold fit in all this with the market going up?
Yeah, so gold and Bitcoin are kind of like the antidotes to poor banking systems and poor governments. And so as the Fed keeps producing more and more fiat and creating more and more zombie companies, it's going to create an opportunity for people to step away from the banking system and be able to get something that's not correlated. And that's where cryptocurrencies are going to do really well. And that's where gold and silver, and not so much the metals as the miners. It's fine if you want to hold metals and throw it in a vault and have an IRA with stuff like that, but you're going to really leverage your position by buying the gold and silver, platinum, palladium, tungsten, uranium miners. All these will give you extreme leverage to the price movements in these metals, and they're all moving up. So as they move, you get a 2 to 4x move on the miners. And if it's a small miner, you may get a 4 to 8x move. And there's some lottos out there that we picked for people last year that some are up 100, 150, 200% already. Wow. So this is the beginning. We're probably in inning 3 of this. The Fed can't stop. So they stop, the whole thing grinds to a halt. And so that's where the money's going to start leaking into. It's going to leak out of financials. It's going to leak out of tech. It's going to leak into the precious metals, and it's going to leak into cryptocurrencies.
Fascinating stuff, Bob. Absolutely fascinating. If people want to get in touch with you, how can they learn more?
Yeah, go to tradelikeagenius.com, and you can text us, you can call us, you can chat with us, and we pre-bundled a number of the services already, whether you're a beginner or more experienced trader, or you like to trade crypto or stock or both. And so we created 6 different bundles. We pre-discounted them 65% off our normal pricing. And what you pay for the service, Dr. Steve, is just nothing compared to what you're going to get out of it. We're often told that we undercharge for our service, but I want to make it affordable for people. Yet still, you can see there's value there for you, and it's worth it for me to offer it. So if you take advantage of these discounts by Saturday, I think it's the 13th, you'll get those discounts. So I encourage people to take a look. You'll find after a couple trades, you pay for the whole year.
Oh, that's wonderful. And we'll absolutely have a link down below under the video. Bob, thank you so much for being here. And during uncertain times like these, again, it's very reassuring to know we have resources like yourself and your company that we can go to. Thank you so much. You're very appreciated.
Thanks, Dr. Steve. Thanks for having me.